Oh, good evening, everyone. It is currently like just past midnight on January 11th of 2022. Um, and what I kind of wanted to go get into today was just a few things. Pretty much, I did not give you all a market preview for the mere fact that I gave you guys a Flash Friday, right? So I felt that maybe not too much changed between that Friday evening I made that video and between that yesterday night. Um, Even though futures did open slightly below, what we closed at the previous Friday, it just no, there was not enough market data, new data, new things to come on about to even devise a different thesis or devise a different game plan to kind of talk about. So I think I may be rethinking how I want to maybe structure out the video specifically. Maybe I do a Flash Friday and it kind of goes over maybe my trades more specifically. And the preview will be earlier in the week sometime, whether it be a Monday or sorry, either whether it be a Sunday night or a Monday or a Tuesday thing, um, before we get deeper into the week. And I may kind of structure it that way. But in all honesty, I mean, just let me know what you guys are feeling. I think it would be nice to obviously accommodate my subscribers, all the people that are interested in the content that I'm putting out, as I'm still trying to get my get my flow for it. So yeah, so we'll see as things continue to progress, pretty much. Um, and yes, please go ahead and leave this video with a like, give it a thumbs up if you haven't already. Subscribe to Agent 14 and enjoy the fireside chats. I should also be recording a podcast soon. I still have a little bit more research to try and get done before I can really sit down and talk through that, and hopefully like to get that to you guys before the end of the week. But if I can't, please forgive me. Um, a whole lot of things that were planned to occur plan came, and a lot of deadlines are coming up for myself. So just trying my very best to to be able to meet all of them. But let's get into it. So I know we charted this out on the ES last time and NAS in the NQ or whatever, but I don't want to do that anymore. I want to just stick with the actual ETFs themselves. It just makes it easier because I kind of get sick and tired of like, oh, I drew this on the ES, but then I didn't draw it on SPY, but they're basically the same exact things, even though they get tricked. You know what I mean? And then I just end up like, for example, this dot that I drew here on SPY, I was when I did the analysis previously on the ES, I don't think that I was focusing on the SPY and the QQQs. I don't think that those dots were there um, on my analysis of the ES. So that kind of starts to, you know, put some weird things in perspective for myself at least, because if I saw something on this chart that I didn't see on this chart, that because of the timing and different levels and finding little things, it kind of throws me off. So I'm gonna save these charts for pretty much whenever, like maybe whenever I need to do specific futures things, which may not be anytime soon, but we're just gonna collapse those, and if I need the indexes, I'll use these. Look at the VIX, I can use this, but this is also pretty much what my market watch list looks like. to know the overall indexes, market direction, get the advances and decliners, the Dow, a Bitcoin future, we just went over these. S&P, Nasdaq, Dow, um, Russell 2000, triple Qs, basically Nasdaq, Russell 2000, the SPX, which is again basically the same exact thing as SPY and ES, but they're different financial assets. Like they're different, but they're the same. If you get what I'm trying to say, they're different, but they're the same. Like I promise you, they're the same. So yeah, forget that, collapse that, whatever. On to the next. What we saw was super interesting in Monday's trading, because if you also remember my last video, I tried my very best not to be super biased to the downside and very bearish in my tone and sentiment, but um, it was kind of where I was in the market at that point in time, and it kind of ended up playing out that way in that manner at least. So um, I went ahead and pretty much, and I could show you guys real quick about a few things. I went ahead and I posted this chart on the 9th, basically saying just after that video, actually, I believe. And just kind of looking for that 460 to come into play as a level of magnetism to potentially find its support and maybe start to bounce off of this. And and um and then today we saw the immense crack, right? This update that I sent out just before 11 a.m. today, sorry, or the 10th, whatever, same difference. And insane crack, insane amounts of selling that we saw in the market. Uh, Basically, simply because the Fed doesn't know what it wants to do. On the same exact news, like a lot of people are getting concerned about the fact that, hey, um, rates are going to be increasing, and maybe I shouldn't be in equity specifically. And I think that same thing started to trickle over into other asset classes, because we also saw Bitcoin drop below 40,000 for like the first time in since what? Since October. Um, and that was certainly something to think about, really. If you, I don't even think, did it get to? No, it did not even get to 40,000 October. So though I think those figures kind of date back to August. That 39.7, 39.8 and stuff. Yeah, so we have not seen these levels in a while. And because of that, a lot of people are potentially selling off and maybe transitioning lightly back to bonds, just to try and keep their money, like, just at pace with inflation, if not worse, way worse than inflation itself. But yeah. So if we continue to look back at these indexes, um, we see what occurred, right? We saw that crack all the way down to the 457s, 458s. And now if we look at this, we see a nice grouping of candles on the hourly, confirming some kind of bounce and movement upward. And it ended up essentially filling the gap almost that it created on the hourly chart. So that's awesome to think about, all in all, right? Especially as a long-term investor or as an investor as a whole. You're like, hey, finally, I'm not down, or not down as much as I was earlier this morning. But I mean, I think that this could potentially be, the base or the bottom, you know, of more runs and moving back forward up towards that 470 directionally. Whether it will get rejected at 470 again, and maybe I have to worry about this line again to to maybe I need to worry about this line again, and we get another potential downturn to 465 there, but that's a problem that I will solve when I get there. You know what I mean? Like I find it really hard. A lot of people believe that, what is it, that hey, you have to know when it gets to here, trade there, flip it to the short, catch the short and the downside back to 463. Like there's so much to the dynamics of it, but in all reality, like I just like to plan my few steps ahead and go about those steps. So I'm gonna go ahead and explain to you all pretty much how I was able to capitalize on a very similar move. So I traded the Dow today, and actually I missed out on a much better, and it's actually kind of ironic that I would even. I'm gonna say this first. I missed out on an insane RR multiple. I sold rather early, missed out on probably like 100 basis points on the Dow, which if anybody knows, like that's like 400 points damn near. Um, and I'm usually the person that will never sit here and say, "Oh, I missed out," or "I missed," I can't believe I missed that trade or whatever that is, because opportunities come and go every single day. But today, it kind of burned a little bit more than usual. I definitely felt FOMO, and I'm here to tell you, like, what I felt in that scenario. I have not felt in quite a while, right? And I mean, I'm not gonna say I've been trading for super super long. I have not. I've known, or I've been studying the stock market since high school days, roughly. So that puts it. I guess I'll end up dating myself. Sure. Um, So that puts it about 7 years now, maybe six years, I think. Yeah, something like that. And but have been actually trading and not just buying random things here and there and getting lucky on a couple of buys. But actually trading now for about coming up on 3 years. I think actually about 3 years exactly. Yes. And yeah, and I haven't felt this level of FOMO in a while because I had good size on this trade because I had really high conviction. I saw a lot of other things coming in with um with all the indexes and all the negative sentiment towards the market. I put some good size on this, and because of that size, I got really content with the profit that I saw and kind of just left it at that and said, "Hey, this is a great trade. Close it." So I come to you with a grain of salt by saying that, like, yes, I did feel FOMO, and yes, I did mention that I could have done a better trade. Yes, whatever, whatever, whatever. But there's no way that in all of my trades in forever, whether it be my going history or in coming upcoming future, that I can say, "Yep, I shorted exactly here at 979.98. And I caught it all the way down here to 956.49." Because guess what? That most likely won't happen. And then secondly, yes, you caught that to there, right? I guess this is just gonna be end up being a video about FOMO and about like slight trading emotions and being able to deal with them, right? Because the same reason why something like maybe catching this bid back up to 470 and then back down to 465 and then maybe back up to 470 until it wedges into here and then we see a volume break because bad news happens in February or whatever that is. If I'm trying to plan all these steps ahead, right? There's an infinite amount of variables that could occur between now and then that will then change that analysis and change the probability of those things to occur. So why should I start analyzing so far ahead, right? And try to say, yes, this is where the bottom is going to be at exactly. Yes, this is where that is because I know exactly where I'm going to cut my short, go long, do this and do that. Because in all reality, I let's say I cut in let's say I traded SPY today, whatever, right? I caught the break of or whatever. Maybe I had some shorts from over the weekend, or maybe I just got a short off the open sell off this morning, right? who's to say that tomorrow, right, that I caught the short, whatever, yeah, and maybe I sold somewhere at this red line or roughly or whatever, and I got a profit and I kept it going and I left it at that, right? Who's to say that tomorrow we don't get down again to 477? I mean 457, sorry, or even 455 range. Like a lot of these things are possible, and we can't say that, oh yes, I made the perfect trade by going short here and covering my short here, and then potentially stopping it there to then come back to here, like and there are people that trade that way, and if you do and you're profitable, yo, props to you, love, all mad love to you, and I really like you are probably goated with what you do, real talk, as a lot of other traders do, right? A lot of other traders will read the heck out of some moving averages, okay, and Fibonacci's, okay, and VWAPs and MACDs, and be able to really kill it. But in this game, you have to also know what you can understand and what you personally can take with your trade. So I may say yes, I missed out on a trade because I covered my short really quickly or quicker than I was kind of expecting to because I saw a good number. Yes, I did change my plan. Yes, should I have done that? In hindsight, I'm sitting at it saying no, but who knows? In that moment, I could have easily got stopped out, and maybe the same way that the SPY caught a nice bid, maybe Dow would have caught an even bigger bid, and I ended up trading and turning whatever profit I had into dust, into some loss potentially materializing into a loss. So I mean, and like I mentioned, pretty much like you there's a lot of things that can happen in this game, and you have to respect the multitude of possibilities that can come from it, and you have to accept what you see in front of you, a lot of times, so that you can potentially continue walking away, right? No one ever went broke locking in profits, and I read that statement. I think Umar Ashraf, I hope I said his name correctly. Amazing trader. He said that, I'm pretty sure, multiple times. I'm pretty sure I read it somewhere as well. Like it's not something that anybody one trader wrote, and said like this is a part of my brand or anything. But no one ever went broke locking in profit. So basically, find what works for you. Find your edge. See what you see in the charts, and try to develop a trading plan around that. Because the same way how I may potentially trade this same exact candle, somebody somebody caught the short down to this level. Oh, what happened here? Let me just remove this one. Somebody caught this short down to this level, the same way how somebody saw these grouping of candles and caught the bid right back up to fill the gap. It's the same way how somebody is potentially still short from up here, or maybe somebody's still short from down here because they have a longer horizon, a time horizon to maybe take a look at some of these things, right? So in this market, you are buying and selling based off of whatever someone else's strategy is, and you kind of have to. I'm not saying you have to play into their strategy, because you should never play into someone else's strategy, but you should play into your own and understand your limits within your strategy, and say that yes, within that, me looking at this candle setup and me reading these economic potential news and how it could affect the markets, what big movers are going to be affecting this potentially, what news can essentially come from this. You have to understand the ripples and waves that come with those things, right? So for example, right, this week I mentioned some news that can come out this week. We got the Fed chairman coming out, Mr. J Powell. He's going to do a hearing today at 10 a.m. So we're going to hear some talks. We're going to see what that's about. And I know that usually the markets are slow when the Fed is going to talk that day, meaning now I can then use that information in my strategy, right? I can say, okay, yes, based off of what happened in the past, multiple days where the market has gotten slow because they're waiting on news from the Fed to potentially make and buy and sell and make the moves. And because of that, I now can use that information in my strategy, in my edge going forward, so that I could be a more accurate and methodical trader, right? And how will I do that? Maybe that means I don't take any trades before 10 a.m. And maybe that means I don't take any trades at all because the volatility could be up there after maybe some minutes come out, and maybe Jay Powell says something that we're not expecting to hear, and now things change, and again the multitude of possibilities continually presents itself. Or maybe at 10:30, I'm sitting there watching the news and I'm listening to whatever, confirmation he's going to come out and say, and maybe something he says or something he suggests to can give me some type of insight on what can happen in the next 30, 40 minutes, or what can happen within the next month. And then I can use that in my strategy to then devise and see what type of plan I can put on and see what type of trade comes. So I remember specifically last time I watched a Fed chair event um, that we caught. We were down, but that day I think we caught a bid. We caught like a nice swing move that was just a lot of buying to the upside, like almost 1 or 2% in the indexes. So imagining like the individual stocks specifically, and I'm like, hey, like, what happened? What did he say that caused me, or that caused the market to run like this? Or what occurred? What happened that caused this to happen like this? And then you can start to create a backlog, whether you write it down or you keep that in your head, and you know that, hey, every time the Fed talks about raising rates, most growth stocks are going to go down because of that, right? Or you can say, hey, because, and another thing as well, right? When based on the Phillips curve, right? If we look, and I'm going to pick that up, it's a Australian, I believe, Australian economist basically talking about the Phillips curve, which essentially finds the relation between inflation and unemployment. And I'm going to just quickly show you guys an example of that, if I can. I'm trying to get a good one, like one with like some good detail on Google, but I'm not really finding all too much from it, but whatever. We know that, forget it. Let's just pick one of these. We can use, dang, none of these graphs really have what I'm trying to show you specifically. Okay, maybe this one's probably the best one. Yeah, this one's probably the best one, right? So, oh great. Oh my, never mind. I don't want the cookies. Forget it. We're gonna do this. That essentially, right, as the based on these vectors and the similar like downward facing slope, as unemployment rates increase, which is what we have here on the x-axis, we see, oh no, that's wage growth. That's the wrong chart. I apologize, but I'm gonna just use one of these then instead. The inflation rate increases as unemployment increases, right? So this, in this specific scenario, this point A is saying that at a 6% unemployment rate, we see about a 2% inflation rate. But then when we see a 3% unemployment rate, we see about a 5% inflation rate, right? And I'm no, world-renowned Nobel Prize winning economist or anything, but I want you to just think about like very basic scenarios in this, right? If the unemployment inflation rate, if we just look at what it means just generally, we're not going to go deep into details. It basically means, right, the it's the buying power, the lack of buying power, essentially, of your dollar. So in this specific scenario, 5% means you have 5% less money or less buying power with the money that you do have. If I have $100 now, I can buy about $95 worth of goods in comparison to another scenario where here we're in A, I could potentially buy $98 worth of, 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 of goods with value that I have with my $100, right? Very basic explanation. This is like me trying to like just keep it as simple as possible, right? And then you see here the unemployment rate 3% and 5% inflation. Now, I want you to understand just this very like I'm gonna try and keep it as simple as possible, like I mentioned, but if the unemployment rate is high, right, meaning a lot of individuals aren't able to work to make ends meet for their family, what would happen if the money that they did make or the money that they did have and saved while being unemployed or maybe collecting unemployment, what would happen in the market if the inflation was maybe 7%? Like like literally, almost quite literally a disaster would occur. Like I'm talking like Great Depression, I'm talking like insane, like very detrimental things because of the sound principle that more people aren't making money. So if you take away more money from them with a higher inflation rate, essentially, it would lead to terrible economic conditions. Now, in the very inverse scenario where we have a low employment rate, a 3% employment rate, a 2% employment rate, if we have an inflation rate of 5%, now the question starts to come, well, hey, more and more people are working, more and more people are potentially, getting raises after working for that year or 2 years and, adding value to our GDP. You know, the inflation is a natural thing that will occur now because more and more people have more money than before, at least in terms of A scenario and B scenario, thus making it a scenario where our buying power slightly diminishes because of pricing and competition, right? The more and more people can buy that $40,000 sports car specifically. So maybe we can charge less because of, again, the laws of supply and demand. And if you've taken macro or microeconomics, you've seen these curves and you've seen these dots and you know how it'll adjust and move based on different scenarios. But that's something that's super important that I just wanted to kind of voice to you all as well because of what we've got coming up as well this week. And that's Wednesday. We have the month over month and the year over year core price inflation, right? Where we're gonna really see if what Jay Powell's saying of transitory, rah rah, obviously he retired that word since, but I'm still holding it over his head because he shouldn't have said it, in my opinion, in my humble Agent 14 opinion, right? Um, and then later, and then as well, the jobless claims. We're gonna see how many people, right, are stating that they're that they're not able to get work, right? Because if we continue to look at these figures month over month, year over year, and we see what's happening, right? And we see the correlation between the fact that, hey, yes, jobless claims are still slightly higher than usual, and inflation is where it is. Maybe we can start to see some form of a stabilization within inflation itself, or are we going to see potentially hyperinflation? And this is where you can start to use now knowledge, whether it's newfound or if you had it last year or whatever, and you can start to apply that to economic principles and then apply that to what happens in the overall market and the index, and then potentially maybe make some trades off of it. Make some trades off of it, make some money. Make some money, feed your family. Feed your family, you know, more smiles. Happy wife, happy life type deal, you know? Um, but yeah, so that's pretty much like the gist of the majority of what I have for you all today. But just try to find your edge. Try to find what you can see, what makes most sense, what like what logic you can apply to a lot of these decisions. Um, and not only that, but the fact that we're starting to see this bounce was a great thing, right? Because we saw, because it gave us information, it gave us data for us to go back and keep in our minds and say, oh, this is what happened. Great. Now what can I do with this information now? Right? So let me give you an example of what you can do with this information. We saw SPY sell off, whatever. We saw this chart. We've seen this chart pretty much all video at this point. We look at the cues. We see what happened with tech. It tried to break in today's candle. We ended up closing back at the trend line essentially, right? And then we also can look at other tech. So Microsoft was looking very similar to the Q by sitting here on the support line. And maybe if we continue to find more buying, we can start to see that this trend line is continually respected as a support, and we may be able to find some movements towards, let me just change this time period, boop, back up and towards the 318s, maybe even the 320s really, right? So now we could potentially find that trade and say, hey, yeah, I'm going to potentially go long above 315, 315.5 and aim for about 320 where we were previously as some form of a support here and here. Or you can use this information and maybe use tomorrow's trading day's information to say, yeah, I think it's time for me to go long again on Microsoft specifically, and I'm going to aim for the 330s. Why? Because that's what you see, and that's where you may see some form of line regression. I could potentially draw, or mean regression, I should say. I could draw this potential support here, and say, yeah, market did come up, and what happened there, it kind of bounced off this, and then it held this multiple times, and it bounced here, and then we saw indecision on this, where we saw two body candles change, and then they change minds, and then so on and so forth. And then maybe I could take this trade, and maybe you swing that trade out for 2-3 weeks. Or maybe you're even someone else on a different time horizon, and you say, yeah, this is a nice bounce here. If I see more buying, we get about 320. I want to see 345. But what just happened? I just essentially gave you, right? You can look at the index and see if buying continues to happen, and we to push over this 382, we see strength, and we after especially got knocked down here, the sellers got taken out quickly, and the buyers said, no, I want more, and they drove it right back up, made it seem as if the day ended green when we were down almost 2% at one point, I believe, in terms of the Nasdaq, right? And then now you could look at this and say, yeah, the buyers are probably going to step in, and I just presented you 3 different ways that you could potentially trade this, and they're all on 3 different time horizons, right? And that's one of the big differentiating factors, because a time horizon can most certainly do that. And you have to also keep in mind what the specific candle means. This one, that one, we all know as a potential hammer, right? When you see a big body to the top, long wicks to the bottom, show that show that, hey, sellers did come to try and push the price down, but the buyers bought it right back up. And that potential hammer could be something interesting to watch out for, no doubt, because not only that, but we're also looking at it from this perspective where we've kind of seen it maybe break out of some form of like a symmetrical triangle. If I can draw this triangle, I generally don't like going wick to wick, but I'm gonna kind of do this and then do this, right? And somebody probably saw that and said, "Yeah, I like this short, taking it out from the beginning of last week, and they're gonna take it down to 311." Right? There's an infinite amount of ways to really try to potentially trade something, and it's honestly all completely and solely up to you on what you see and what you have your conviction about, and what you can essentially come up with as what you define for what makes the most sense to you, right? There's this thing called, statistical inferences, which are basically, the process of making an estimate or prediction or decision about a set of data, right? And you can build your confidence level on that data, right? So that you can, that, hey, the confidence level is basically like the proportion of of what I'm estimating to be correct, right? And whatever, and then you may also take a look at the significance level as well and say, yes, the measurement of how frequently I'm probably going to be wrong also can take into account, right? And all these things will matter as you continue to travel through your trading journey as well. But if you take a look on my quick list here, my short list of names that aren't indexes, we got Microsoft showing bullish energy and bullish love coming through on here. Probably gonna buy some more. We got Apple bouncing off the 168 support after cracking this potentially. I'll probably just remove this now, honestly. And maybe we start to see a double bottom form here as we make our way back to 183. Tesla. Tesla showed strength when, honestly, this is a lot of strength in comparison to a day where the market closed just just barely green. Um, Also, Shopify got beat up over the past few days, so seeing it only down 1% is a refreshing feeling. Square, also very much the same scenario. Not as much love as some others, but we'll start to continue to see, what comes from this name or block. Same difference. And then AMD ended the day flat, somehow supporting this trend that I was kind of watching to see if maybe it will break because of this market selling. But now that we're getting market buying and market kind of holding, I'm not so sure on AMD as much as more, and this will potentially be a support. And like I mentioned, most of my time frames are next day or rest of week, right? That's kind of how the way I like to think about it, right? That's why in my bio it says, "Hey, daily company valuations keep me going." um, and then if we look at financials gapped up, but because of the market weakness, everything sold off with it a little bit. So Bank of America still basically are at all-time highs essentially, but off its highs in the trading intraday market. Roblox as well found some support down here, back where it was before their earnings insanity. And because of that, it kind of stopped its bleeding. What am I looking for? 84 maybe? Yeah. And then Nvidia as well started to hold hold some support here up at 270 after, we saw this steady downtrend and kind of a wonky scenario where we see this wedge forming almost. Amazon definitely saw a decent amount of selling and quickly got rid of it with that bounce. Whether it's going to stay below this trend, that is a question. But the fact that it held the 3,200 really well with this hammer, um, it leaves me again cautionary on going short for the coming week or for the coming time period, right? Unless other variables come into play and continue to shift the sentiment again. Boeing is kind of just a chart on here. I'm not quite interested in Boeing currently. I do see this long overarching trend that it's held for quite some time. And maybe it'll do something with this, maybe it won't, but it's there because that's what I saw. And then the rest of the short list is kind of boring. Micron definitely tapped out at about 95, unless more chip and potentially some more news comes from this. I'm not really seeing much insanity coming from Micron in the time being. I did really like the long position I took from like 78, I believe, or 79. That I took all the to 90s to the early 90s actually. Now nowhere near to like 98 and stuff. But I took it to the early 90s, and that was a great play, phenomenal. I really liked the idea of the fact that we had this trend right here. It broke out, came back to it, and then continued breaking, and that was what I really liked. So I took it from the late 70s to the early 90s in a swing trade over a longer time horizon, because in order to ask a stock to go 16% in 2-3 days, maybe you have to kind of have like insane days. Something has to happen. Earnings potentially, maybe amazing news came from the CEO announcements. Maybe an analyst reached out and gave some specific news on something, and it's a lot of conditions have to line up for something to go 16% in a week, 16% in 16% in 2 weeks, in 3 weeks, in 4 weeks. You have to look at it and you say, okay, yeah, the probability of it happening over a longer period of time seems a little bit more likely. And then you could use that again where? In your edge, in devising your plan. So that's pretty much it for me today. I wish you all the best in your trading journeys, and have a great one. Agent 14 out.